Did you have a nightmare?
No, I'm worried about this family's financial future. Does your retirement plan provide predictability of income and protection against market risk? Do you have good supplemental health insurance? What about estate planning, car insurance? Dents are easy to fix, but liability's a nightmare.
Buddy, we're with AIG.
Oh.
The AIG companies, the strength to be there.
Don't get up. I'll tuck myself in.
This is AIG. They used to be the biggest insurance company in the world. And the reason AIG is important now, the reason they've gotten their mitts on $170 billion public dollars, the reason the government thinks they matter so much that they need 4 bailouts and counting, is that AIG came to provide financial services to the financial services industry. Specifically, they provided insurance to the financial services industry in a wildly irresponsible manner. When other companies were trading all of these things that were totally unregulated, say big combined piles of bad mortgages, which was a reckless thing to do and ruined the world economy, AIG was the one insuring them. AIG said, yeah, bundle and trade those subprime loans and do those credit swaps. We've got your back. They said that even though they totally didn't have anyone's back. They weren't actually capable of making good on those insurance policies, but they wrote them anyway. At a moment when their function should have been to deter risky business, to say, hey, we can't insure these bad loans, so you probably shouldn't make them, AIG didn't do that. Instead, they endorsed the risky business by insuring it. They made the crisis immeasurably worse than it would have been. And they ensconced themselves so inextricably in everyone else's finances that if they went under, at least so the argument goes, if they went under, so would everyone they did significant business with. And they did significant business with everyone.
The U.S. government seized control of insurance giant AIG, American International Group, in an unprecedented $85 billion bailout. The Federal Reserve made the deal Tuesday to save AIG from collapse in what the New York Times describes as the most radical intervention in private business in the central bank's history. The unprecedented run of events has altered the shape of Wall Street and brings the total amount of government rescue efforts to stabilize the financial system and housing market to about $900 billion. Michael Hudson, we're talking government bailout, which means taxpayers stuck with the bill. Do you think this is the right move?
No, it's the worst possible move. Wall Street's been preparing for this for years because every financial analyst knows that the debts can't be paid. And the question that Wall Street has, if you're going to take a gamble on bad debts that can't be paid, how are you going to come out a winner? And there's only one way of coming out a winner, and that's to make the government bail you out. This has been known for years because it's inherent almost in the mathematics of compound interest. Every banker I know knew that the loans they were making were going to go bad. They were trying to sell them to somebody else, ultimately expecting them to end up with some sovereign wealth fund. And now McCain saying that this is the result of fraud and incompetence. The government's now bailed them out, but by bailing them out, Wall Street was coming to terms with the bad debts. When Bear Stearns went under and when Lehman Brothers went under, this began to wipe away the bad debts. And when the debts exceed the ability to pay, there's only one thing any economy can do, and that's wipe them out. Instead, the government is trying to keep the fiction alive, and what Paulson did yesterday in bailing out AIG was to try to lock in whoever is the next president, not only to further bailouts of Wall Street, ostensibly to protect the public money, but to make it impossible to write down the debts of the 4 million homeowners that are expected to default this year, impossible to write down the debts of companies that have issued junk bonds, impossible for the country to get rid of this excess of debts that can't be repaid, and you're having really a war now of creditors against debtors.
This is a corporation that finds itself in financial distress due to recklessness and greed. Under these circumstances, it's hard to understand how derivative traders at AIG warranted any bonuses, much less $165 million in extra pay.
Well, that was the president earlier today talking about the $165 million in bonuses handed out to AIG employees. The president has asked Treasury Secretary Timothy Geithner to explore every single legal avenue to block those payments. Meantime, New York Attorney General Andrew Cuomo says he'll subpoena AIG after the company failed to disclose the names of those who received the bonuses. The insurance giant was saved from collapse by a $170 billion taxpayer bailout. Here to talk more about the issue is Austin Goolsbee, member of the Council of Economic Advisors and chief economist on the President's Economic Recovery Advisory Board. He joins us now from the White House lawn. Austin, good to have you with us. I got to start with AIG and those bonuses that they want to give out. Seems to be like what everyone's talking about. We understand that the administration is angry. The president wants to block them. Can he, though, legally do that?
But he was angry. The Secretary Geithner was angry, and the president told the secretary, go figure out every means that does not break the law that we have to reduce, claw back, and eliminate these bonuses, because they were totally undeserved. I mean, as the president said, after the year this company has had, it's totally unclear how they could warrant multi-million-dollar bonuses. I mean, it's almost unbelievable.
Now, you know, AIG CEO Edward Liddy, he also says that the retention pay for talented people helps taxpayers by making the units attractive to buyers. You know, AIG is supposed to be selling off units. Do you buy that?
Well, I don't know. He said they needed to pay these bonuses to keep the best and the brightest. And I guess I was thinking, geez, if these are the best and the brightest, who are the worst and the dumbest? I mean, these guys cost the American taxpayer $170 billion.
Amid the AIG outrage, the question remains, who ruined the insurance giant? On Capitol Hill this week, the current CEO blamed previous management. So that's who we tracked down. I sat down with Hank Greenberg, the first CEO who put the current compensation structure in place and who created the division responsible for the losses. If you were still CEO, would you have paid out the bonuses?
Absolutely not.
Hank Greenberg built AIG into the largest insurance company in the world. After nearly 40 years at the helm, he was ousted in 2005 amid an accounting scandal. He claims retention bonuses started after he left.
When I was there, nobody had a contract in the company, including me. Didn't believe in them. If you didn't do the job, you didn't deserve to be there. There were no contracts.
No contracts? No guaranteed bonuses?
No, never. We had a bonus plan based on performance. If you didn't perform, there were no bonuses.
Do you think that the managers at AIG are guilty of something criminal?
I don't know if it's criminal. I think it's stupidity.
Should they be punished?
Well, do we punish stupidity? I don't know. Those who are investigating should determine whether or not there was just stupidity, was there fraud, was there whatever.
And what do you think about the current bailout plan?
I think something needs to happen, but I don't think that the legislation that's in front of, going back to the House and the Senate right now is what it needs to be, and there needs to be more regulation.
I think that if we're giving a blank check to corporations who have made the mistakes, that we shouldn't have to pay for it. And if we're going to do anything, it should be based on the taxpayer and based on homeowners, not on Wall Street.
And at the same time, while some politicians are calling for people at home to be more fiscally responsible and to pay for their mistakes, on the other hand, we're giving huge, enormous bailouts to these guys who are billionaires and don't actually need it.
If you were an AIG executive, would you accept a bonus this year?
No.
Why is that?
Because they don't deserve it.
Probably. Why?
I would feel entitled. Maybe I did the work. It's a part of the arrangement.
I would not. If I could do anything, I would return the money, and if I couldn't return it to AIG, I would accept it and give it to charitable causes.
No, I would not accept the bonus, considering the fact there is a downturn and the fact that we had to bail them out, meaning the taxpayers.
Of the $100 billion that AIG was given, over half of it went to foreign banks to pay off debt. Should taxpayer money essentially go to bailing out foreign banks?
Well, I don't view that as a bailout. I view that as, assuming this is exactly what happened, as fulfilling their obligations to repay debt.
No, definitely not. Taxpayers' money has other jobs to do.
If you think AIG will ever stop bleeding money, you
are getting old, but you'll never get to retire thanks to AIG. Avarice, ignorance, greed. AIG.